Let me ask you something. How many trades did you take last week? Not roughly. Exactly. What was your average risk to reward? What time of day were your winners? What setup gave you the most profit? If you can't answer those questions in under 10 seconds, you are flying blind. And flying blind in the markets is how accounts die. Most traders spend hundreds of hours studying indicators, backtesting strategies, watching charts. But they won't spend 15 minutes writing down what actually happened. And that gap, that refusal to look in the mirror, is the single biggest reason most traders stay stuck. Today we're going to talk about the most underrated, most ignored, most powerful tool in all of trading. It's not an indicator. It's not a strategy. It's not an algorithm. It's a journal. And by the end of this video, you'll understand why your trading journal is worth more than any strategy you'll ever find. Mark Douglas spent his entire career studying why traders fail. And in Trading in the Zone, he made an observation that most people completely miss. He said the best traders think in probabilities. They don't need to know what will happen next. They just need to know their edge and trust the process over a large sample. But here's the thing nobody talks about. How do you know your edge if you've never measured it? How do you trust a process you've never documented? Douglas wasn't just telling you to think differently. He was telling you to track everything. Because without data, probability thinking is just wishful thinking. You can say, I trust my edge all day long. But if you can't pull up your journal and show me that your edge exists across 200 trades, you don't have an edge. You have a feeling. And feelings are not a trading plan. Let's talk about what actually happens inside your brain when you trade without journaling. Every single day, you're making dozens of micro decisions. When to enter, where to place your stop, when to take profit, whether to hold or cut. And your brain is recording all of it badly. Psychologists call it the memory distortion effect. Your brain doesn't store memories like a camera. It reconstructs them, and it reconstructs them with bias. If a trade worked out, your brain remembers it as a brilliant decision. If it failed, your brain minimizes it or blames external factors. This is not a character flaw. This is neuroscience. Without a journal, your brain is literally rewriting your trading history in real time. You think you remember what happened, but you don't. You remember a version that protects your ego, and that distorted version becomes the foundation for your next decision. This is why traders repeat the same mistakes for years. They genuinely don't know they're making them. Brett Steenbarger is a clinical psychologist who has worked with professional traders at hedge funds and prop firms for over 2 decades. In his book, Enhancing Trader Performance, he makes a claim that should stop every trader in their tracks. He says elite performers in every field, surgery, chess, athletics, music, all share one trait. They engage in deliberate practice. And deliberate practice requires a feedback loop. For a surgeon, it's reviewing every procedure. For a chess player, it's analyzing every game. For a musician, it's recording every session and listening back. But for traders, most traders have no feedback loop at all. They trade, they win or lose, they come back tomorrow and do it again. That's not practice, that's repetition. And repetition without review is how you ingrain bad habits, not eliminate them. Steenbarger says the journal is the trader's feedback loop. Without it, you cannot improve deliberately. You can only improve accidentally. An accidental improvement is not a career strategy. Here's where it gets interesting. Most people think a trading journal is just a spreadsheet. Entry price, exit price, profit or loss, date, symbol. And yes, that data matters, but that's not what separates a journal from a log. A log records what happened. A journal records why. And the why is where all the gold is buried. Why did you take that trade? Was it part of your plan? Or did you see a candle move and feel the pull? Why did you exit early? Were you following your rules? Or did fear take over? Why did you hold too long? Was it conviction? Or was it hope pretending to be conviction? When you write the why, patterns emerge that you will never see from a profit and loss column alone. You'll discover that 80% of your losses come from the same emotional trigger, that your best trades all happen in the first hour, that you overtrade on Fridays. This is the data that changes everything. Ed Seykota is one of the original market wizards. He turned $1,600 into over $16 million. And when Jack Schwager asked him what made the difference, Seykota didn't talk about indicators. He didn't talk about trend lines. He said, everybody gets what they want out of the market. Think about that for a second. If you keep losing, some part of you wants to lose. Not consciously, not deliberately, but your subconscious patterns, your unexamined beliefs about money, risk, and self-worth, they're running the show. And the only way to see those patterns is to write them down. Seykota was a relentless self-examiner. He journaled not just his trades, but his emotions, his dreams, his reactions. He treated trading as a mirror for self-knowledge. And that mirror made him one of the most successful traders in history. The journal isn't about tracking numbers. It's about discovering who you really are when money is on the line. And most people are afraid of what they'll find. Now let me show you exactly what to journal, because if you don't have a clear framework, you'll either write too much and burn out, or write too little and learn nothing. Here's a 5-field framework that takes under 5 minutes per trade. First, the setup. What was the pattern or signal that triggered your entry? Name it. If you can't name it, you shouldn't have taken it. Second, your emotional state before the trade. Were you calm and focused? Angry from a previous loss? Bored and looking for action? Rate it 1 to 10. Third, execution quality. Did you follow your rules? Did you enter at the right spot? Did your stop match your plan? Grade yourself A through F. Fourth, the outcome. Win or loss, what was the result in terms of R, your risk unit? Fifth, the lesson. 1 sentence. What did this trade teach you? That's it. 5 fields, 5 minutes. And over 100 trades, this simple framework will reveal more about your trading than any course or mentor ever could. If this is resonating with you, if you're starting to realize that maybe the missing piece isn't another indicator, but a mirror, subscribe to Executed Edge Trading. We go deep on trading psychology every single week. Now, let me tell you what most traders discover after 30 days of consistent journaling. They discover they don't have a strategy problem. They have a discipline problem. And the data proves it. When you journal 100 trades, you can sort them, filter them, analyze them. And what almost every trader finds is shocking. Their strategy actually works when they follow it. The problem is they only follow it about 60% of the time. The other 40%? Impulse trades, revenge trades, boredom trades, FOMO trades, trades that were never in the plan. And those unplanned trades account for the vast majority of their losses. The journal makes this invisible problem visible. You can't fix what you can't see. And for most traders, the journal is the first time they truly see themselves. Tom Hougaard, one of the most honest voices in trading, wrote something in Best Practice in Trading that challenged everything I thought I knew. He said the journal is where you confront the gap between the trader you think you are and the trader you actually are. That gap is everything. Most traders have an idealized self-image. They think they're disciplined. They think they follow their rules. They think their losses are just bad luck. The journal destroys that illusion. Gently, but completely. When you see in black and white that you moved your stop loss 14 times this month, you can't pretend you're disciplined. When you see that every losing streak is followed by a position 3 times your normal size, you can't blame the market. And here's the beautiful paradox. Confronting that gap doesn't feel good at first. It's uncomfortable. It's humbling. but it's the only path to closing it. The traders who avoid the journal are protecting their ego. The traders who keep one are building their edge. Let's talk about the weekly review, because daily journaling is the input, but the weekly review is where transformation actually happens. Every weekend, set aside 30 minutes. Pull up your journal for the week and ask yourself 5 questions. 1. What percentage of my trades followed my plan? 2. What was my average emotional state before winning trades versus losing trades? 3. Did I break any of my own rules? Which ones? How many times? 4. What was my biggest mistake this week and what will I do differently? 5. What did I do well that I want to repeat? This is not busy work. This is the most leveraged 30 minutes of your entire trading week. Professional sports teams watch game film. They don't just play and hope they get better. They review. They dissect. They find the micro adjustments that compound over a season. Your weekly review is your game film. Skip it and you're just another player hoping to get lucky. Jesse Livermore once said, "The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor." That word, lazy. It's the key. Most traders are not lazy about chart analysis. They'll spend hours on technical setups. They're lazy about self-analysis. They won't spend 5 minutes writing down what they felt during a trade, and that laziness has a compounding cost. Every unexamined mistake is a mistake you will make again. Every unrecorded emotion is a pattern you'll never detect. Every unjournaled trade is wasted data that could have made you better. The market generates a constant stream of lessons, free lessons, but they have an expiration date. If you don't capture them in real time, they fade. Your memory distorts them, and the lesson is lost forever. The journal captures what your memory cannot. I want to address the biggest excuse head on. I don't have time. You don't have time? You had time to take 10 trades today. You had time to check your phone 17 times during market hours. You had time to scroll Twitter for hot takes. But you don't have 5 minutes to write down what happened. That's not a time problem. That's a priority problem. And if you truly understood what 5 minutes of journaling could save you, in blown accounts, in repeated mistakes, in years of going in circles, you'd treat it like the most valuable 5 minutes of your trading day. Because it is. The journal doesn't take time. It saves time. It compresses years of trial and error into months. It turns expensive mistakes into cheap lessons. Every minute you spend journaling pays you back tenfold in clarity, in self-awareness, in avoided losses. The question isn't whether you can afford to journal. The question is whether you can afford not to. I want to leave you with something that reframes everything. Think of your trading journal not as homework, not as a chore. Think of it as a letter to your future self. Every entry you write today is a gift to the trader you'll be 6 months from now. That future version of you will look back at these entries and see patterns you can't see yet. They'll see the growth. They'll see where you were stuck and exactly when you broke through. They'll see the moment you stopped revenge trading, the week you finally started respecting your stop losses, the trade that taught you patience. Mark Douglas said the goal of trading is not to be right. It's to make money. And the journal shows you, in undeniable detail, the difference between those two things. It reveals that your most profitable months are the ones where you followed your rules, not the ones where you were right the most. Start tonight. Open a notebook or a spreadsheet. Write down your last 3 trades from memory. And then tomorrow, journal every single trade in real time. Do it for 30 days. And I promise you, you will never stop.